Today we're joined by Florian Grummes, Managing Director at Midas Touch Consulting. And Midas Touch Consulting focuses primarily on assisting investors with independent research, primarily in the areas of precious metals and crypto. We had Florian on the program once before. Due to technical difficulties on our end, we were unable to publish that interview, but Florian has been gracious enough to come back, share his valuable time and expertise with us. Florian, welcome back. Thanks for joining us. It's good to have you here.
Thanks for having me, Patrick. Good to see you again.
Absolutely. What I wanted to do is start out really with a discussion about the global economy. In our audience, we primarily have active military who are focused on kind of long-term investing. There aren't a lot of day traders. There aren't a lot of short-term investors. And so what I want to do is I want to start out by asking, Florian, in your opinion, where do you see the global economy going over the next 10 years?
Over the next 10 years, oh gosh, it's gonna be a roller coaster, I guess. And since I'm an optimist, I also believe that overall we should be better off than today.
Okay.
However, there is quite a few stuff going on that could actually lead to a totally different outcome. So I personally want to believe in the best for all of us, and believe in a good and happy ending. Kind of romantic in that sense, but man, I mean, there's so much that will certainly happen over the next 10 years, and the elephant in the room obviously is East against West, is China against the United States, and it's, to me, still not really clear how this will unfold and whether it will unfold in a peaceful way. I have serious doubts about that. So and then we have to see how intensive and violent the whole thing can get at the end of the day. Very recently, I had the impression that things calmed down a little bit, at least, but probably just because the Biden regime has to basically make sure that oil stays down, no more extra problems on the table than the ones who are there already, because we're going into an election year, and this will be the big macro event of next year. And but in the longer run, I mean, if you have seen the pictures or the videos this week out of Abu Dhabi, where they welcomed Mr. Putin, and it was a massive welcome, very impressive welcome, a very warm welcome. And if you have seen him shaking hands with the Saudi king or the crown prince from Saudi, also during this week, you have to seriously assume that the petrodollar basically is done, and it's just a question of time when it will really hit America in reality. And we always been talking about this. It's clear that the end of the petrodollar standard, or the end also of the US dollar as the reverse currency, reserve currency in the world, is not something that happens from one night to the other, but rather a slow and long process. However, I couldn't believe what I saw this week when they welcomed Mr. Putin in Abu Dhabi the way they did. So it's clear that things have been shifting very dramatically over the last, basically two and a half years since the start of the Ukraine war. And this will have massive consequences over the next 10 years, at least. It will have consequences for the whole century.
Right. So do you seeing the petrodollar lose its preeminent status over the next 10 years, would you say that it would be a safe prediction to say that the U.S. market wouldn't be the best market to invest in?
I mean, America is still by far the largest capital market in the world. It's the most liquid market, the the most in-depth market. Nothing can compare to it right now. But there is certainly now a growing alliance of players in the world that don't want to deal with America anymore, and for good reasons as well. I don't know where we will be exactly in 10 years. I think it's a gradual process over the next few decades, and we will most likely in the next 10 years be in more of a multipolar world. I don't think it will be directly handed over to the Chinese, like a reserve currency kind of status. I mean, it could be that they have amassed so much gold already that they could basically back their yuan by gold. I mean, there is a lot of people, knowledgeable people, stating or saying that the Chinese have way more than the official, I think, 2,000 ounces, 2,000 tons of gold that they announced. So there's sources telling it would be 10 times the amount, which would be much more than what the Americans have officially. The 8,000 tons of gold in America have not been revised for a long time. We have to see how this all plays out. But again, I mean, referring to these pictures from during this week, you have to assume that it's rather quicker than slower, the whole thing. And it will have serious consequences because it just means that, of course, America will continue to print dollars, so America will never go bankrupt. But the purchasing power of the dollar is basically losing tremendously. And that will be the serious consequence, right? But again, I mean, if America returns to to its roots, which is free market, free speech, competition, less government, less bureaucracy, and freedom and liberty, then I think there's a good chance that America can at least remain the most important power on the planet, even though there's other players in the room that also might have a strong word to say. But right now it looks more like the whole Western world is marching in a different direction. And I think dictatorship is something that the Chinese and the Russians know much better than the Western world, and they have more experience. And in that sense, it's most likely that the power will dramatically shift to the East if the West is not coming back to where we're coming from now. I mean, our free market, free speech approach has brought us to where we are today.
You'd mentioned that the Chinese, you don't necessarily see them becoming preeminent. You see kind of maybe like a multipolar world within the next 10 years. Do you believe that, you'd mentioned also that gold could be used to back their currency, or that they're accumulating a lot of gold to back the yuan?
Right.
I would also assume that you would recommend individual investors hold some gold in their portfolio as a hedge, as a safe haven, as a safety measure, because of currency uncertainty. Would you recommend that? Or again, we're not giving individualized advice to people, but just in general, do you recommend that, or do you recommend other currencies?
No, I strongly recommend to own physical precious metals in your own hands. And the good thing here is that when we talk about physical precious metals, you actually don't really need a disclaimer, because it's been the best financial advice over the last 5,000 years. It has survived everything.
That's true.
You cannot do much wrong. I mean, unless you buy fake ounces and bars, and you lose them, or you throw them away, or somebody steals them. But if you even if you are completely off when it comes to the timing and the pricing, right? You can just sit through. There is nothing going wrong. You have all the time, and as long as you have it, that's the most important thing. And I strongly recommend it, to have at least, I would say, at least 10% of your total net worth should be in physical precious metals outside the banking system, stored in safe places, There is services, vaulting services that offer storage basically outside the banking system. And I think those are the steps you need to take. I mean, I've been buying my first ounce of gold 22 years ago, and the price has gone up quite nicely since then. I understand the last 10 years or 12 years have been rather challenging, because gold didn't really progress as many people have expected, especially in this environment with rather high interest rates. But I'm pretty sure that this was just a consolidation kind of period. Yes, it was a long one, 12 years, but I assume that we are basically at the beginning of this next leg up in the gold market, and it might take a little bit longer than I anticipate here now, or that many people wish for, but I'm pretty sure that we've seen an important 8-year cycle low last year in basically October, November 2022. And usually these cycles, so in a new 8-year cycle, it means that the next 2-3 years, gold should run quite dramatically higher, actually. And we still need a complete exaggeration, a bubble phase, so to speak, in the precious metal sector. If you bring this together with what's going on in the economy and what the Fed is doing and the interest rate environment, I assume that during the course of the next year, 2024, the situation in the economy will be so bad that they have to lower interest rates again drastically, which will then trigger again another wave of inflation. And latest by then, gold will skyrocket. And even if it wouldn't, you still have the gold. It's still money. It's just still sitting there. You can always exchange it if you need liquidity. But I assume that it will be a great way to conservatively, without crazy volatility, without leverage, or without any crazy acrobatics that you can do in the financial markets, but just old school, simple physical metal in your own hands, and you can protect yourself and the wealth of your family. And again, I think at least 10%, preferably 25% of your net worth should be in precious metals.
So a lot of our viewers are active military, and we have what's known as a thrift savings plan. So it's like a 401k,
Mhm.
and in that, inside that program, there's no way to really invest directly in precious metals. You have like broad stock market index funds. For someone like that, how would you recommend them getting exposure to precious metals? Would you recommend that they do a self-directed IRA, if they wanted it inside a retirement account? Or are you only a believer? I know before, Florian, you'd mentioned you weren't a fan of the ETFs, so you correct me if I'm wrong, the trusts, but are you only advocating physical possession, storing it with a third party, maybe not like a self-directed IRA, or what are your thoughts on saving and using precious metals as a savings vehicle for retirement?
No, I think, I mean, you have that option to do it, so you should choose it, of course. Um, I think using it as a savings vehicle, why not? I mean, I'm not a fan of ETFs, exactly. I'm not a fan of ETFs in the sense of your worst case contingency kind of planning part of your net worth, right? And that's what I think about the physical precious metals. I'm not so much looking at massive nominal capital gains or speculation or something, but it's just like something outside of the system, which gives you that security and a position that has no third party risk, right? While in the ETF you have a third party risk, and we have for many years the discussion: do they hold actually really the gold that they claim to hold, for example? Or we have seen in the Corona crash suddenly GDX, GDXJ, the two mining ETFs, the mining stock ETFs, suddenly didn't track the underlying stocks anymore, and the pricing went completely nuts for I think 1 or 2 days. again, in a case where basically the financial system maybe has to shut down, of and they introduce bank holidays, you will not be able to do anything with your ETFs, right? So it's okay if you have that in the other 75% of your allocation in your total net worth, right? So,
Right.
but the 25, 10 to 25% physical precious metals preferably should not be in an ETF kind of structure, and should not be with a normal bank, by the way, as well stored, because they will also have to close on a bank holiday and you will have no access when you actually need your gold. So, but of course, you can play an ETF as a saving vehicle in your retirement account, and I would prefer the PHYS, the FIS from Sprott, which is for sure backed by physical gold. That's actually a good way to play it. Of course, GLD is doing the job when it comes to participating in a gold rally. Let's say you bought a few weeks ago and you sold last week, you would have made a nice gain also with the GLD. It would have worked out, but I'm not sure if this will work for the next 10, 20 years, given the instability in the system already. So I would prefer the one from Sprott. But yeah, I mean, I understand that many have only these options because you have these retirement accounts and you have to move within the structures given. So better than nothing. But if you can basically save in these IRR accounts with maybe the Sprott ETF, and at the same time you buy some physical stuff extra outside of your official retirement planning, would make sense, I think.
You know, a lot of investors, and even well-known ones, kind of downplay gold, right? They say it's a barbarous relic, it's, you know, it's a thing of the past. And they say, you know, if you really want a good hedge against inflation, you know, buy real estate or buy a stock market index. What, Florian, what is your answer to those who say that you want to buy other things besides gold as an inflation hedge? Like, why is it, what is it about gold that makes it a better inflation hedge than, say, a stock market index? Because a lot of our viewers, I think, may not necessarily understand that difference. I don't know if you could maybe
Yeah,
elucidate that for them.
I mean, you can protect yourself with stocks against the loss of purchasing power or inflation as well. However, stocks are also, I mean, they represent ownership in a company most of the time, but then again, they are also part of this whole paper kind of market where there is a lot of things going on that you actually don't understand, and nobody really understands what all these companies are doing. And you have to be a balance sheet specialist to figure really out, is this is actually true what they're doing? Does it make sense, or is this again just the latest pump and dump, whatever it is? I mean, there's so
Right.
many examples on Wall Street that, but um, physical gold has no third party risk. It's just you and the metal. While in owning a real estate, it's you, the state, and the real estate. So they know exactly what you own. They charge you every year, and prices have to appreciating more than the inflation terms, just for you to be break even, basically, because you have already taxes on your property. And if it's your own house where you're living in, it's not an asset, it's actually a liability because you're paying constantly into it. And it
Right.
never stops. It never stops. So and then you have to understand that the real estate prices to go higher, you need to have a certain demand of people wanting to buy more houses, right? But the demographics in the Western world are not actually so favorable, generally speaking, over the next 10, 20, 30 years. So we have more old people and less young people. Um, and just to keep up with the current trends, you constantly have to invest in your real estate. They charge you taxes on top of it. And the main reason why real estate went up so much over the last 20 years was that they lowered interest rates massively. And that allowed many people to be a buyer of real estate who would have not been able to buy real estate. And right now, given the high interest rate environment, a lot of people cannot afford real estate anymore. So many people are not able to move around in America anymore because they would lose the favorable mortgage conditions that they have right now if they would say, no, we move to a different city, but we would buy a new house, give up the one that we're staying in now. And that would mean also getting a new mortgage with totally different rates than the one that we have currently. And so they don't move anymore. And that lowers the demand in the real estate market right now. And if interest rates stay high, there will be less and less people able to buy real estate, and that means demand is going down, and that will also mean prices stay where they are or go lower. So it's a questionable form of protecting yourself against inflation while investing in real estate. It's nice for a cash flow, I see that, but then again, if prices going through the roof, with materials, with people that you need to help you in the garden or just painting your house or whatever it is, everything's getting more expensive, and you will not be able to basically put this into the bill for the tenant. So it will be more and more challenging to have a good cash flow out of real estate. The stock market, if you want to talk about an extreme scenario or example, Venezuela, hyperinflation or massive inflation, and yes, stock market went up a few million percentage, but still the Bolivar was worth nothing outside of Venezuela. So even if you had a few billion of Venezuelan Bolivar in your hands, you couldn't do much in America with it because it was basically worthless paper. So that's a bit of the tricky part when it comes to stocks. So in Germany, 100 years ago, during the hyperinflation, 1923, the stock market went through the roof. It went up 1,000,000%. But the Deutsche Mark was nothing, was not valuable anymore. The exchange rate against the dollar dropped dramatically in those times. So there might be some companies where you can hide and protect yourself with, but it will be very difficult to find the right ones. And in general, I think being completely out of the paper system in such a inflationary scenario, and that means you're in physical gold. 1 ounce of gold is still 1 ounce of gold. It's probably a very promising, a very easy and simple way, and you cannot do many mistakes here. That's actually a very important part of it. You just buy the physical gold, you store it, you keep it for yourself, and you wait. Let time play for you. And I'm pretty sure that we're going to see something similar like in the late 70s. Back then in the gold market, gold went up from $100 to $890 within 2 or 3 years. This was the final big spike of that bull market back then. I assume something similar we will see over the next few years. So I assume it will be easier to move into any other new system, whatever will happen with a physical gold allocation outside the system than with paper assets.
You talk about having, assets outside the system, and that's one of the big advantages of precious metals. Do you see crypto having that same advantage, or is it somewhat still in the system? Meaning to say, if you had a really bad scenario, would we still be able to get access to Bitcoin and things like that if our digital infrastructure was degraded? If there was like a cyber attack, do you see that as still being a good hedge as well, or not?
Yeah, I mean, I've been rather early in Bitcoin, and I used to be very enthusiastic about it. To be very frank and honest, I'm not as enthusiastic anymore now as I used to be. But I, first of all, need to say that you have to differentiate. I think the only really crypto that can protect you is Bitcoin. Everything else is very questionable and is very much a centralized kind of whatever kind of coin made by somebody, and they own the vast majority of supply of the coins. And the beauty about Bitcoin is really that it's decentralized and there is basically nobody who can control it. However, now with the arrival or the upcoming arrival of the Bitcoin spot ETF and the institutional money, I think that basically Wall Street and the US government, at least to a certain part, not all of them, but a few have realized, there are a few powerful players have realized that they cannot stop the Bitcoin network. And hence they decided it doesn't make sense to attack it anymore. We have to embrace it. And that's what they're doing with their ETFs. There is one very important mantra in Bitcoin, which is not your keys, not your coins. So if you don't have the access to the Bitcoin, then it's not your Bitcoin in the end of the day. And it's actually very simple to understand if you want to see the similarity. Physical gold in a vault, if you don't own the key to the vault, somebody else has it. What does it help you that the gold is there in your name and you have no access? Somebody else can always go there and take it out and then it's gone. So it's a pretty similar situation with the Bitcoin ETF. BlackRock and a few other of these big money managers certainly will attract a lot of money and then quickly most likely become one of the largest Bitcoin holders. But the people who buy those products, those ETFs, don't actually own Bitcoin. They own a derivative, a promise from BlackRock and Co. And as we know also from the gold market, with these tools, with these structures, where in the gold market 200 paper ounces for one physical ounce, that's what is being traded to figure out the price for one physical ounce.
Wow.
If you have a similar situation in Bitcoin, yeah, there's all manipulations possible. All price control patterns that we're seeing in gold might come to Bitcoin then as well. And then as well, the beauty of the slow money, right, where you cannot just with one mouse click quickly sell in an emotional situation. With an ETF in your portfolio, you can throw it out within 1 second. If you have your Bitcoin stored in a cold wallet, off chain, only you have the keys. It's already a little bit more complicated to send the stuff to an exchange and then sell it. So that's my problem basically with Bitcoin nowadays. And I also think there's just too much speculation and the network is constantly congested. I don't really see the promises being fulfilled that we were talking about 10 years ago when it was new and totally underground. But we have to see. I might be wrong. Right now, I feel like it went up to 44K. My target for that year was roughly 50K or 48 to 50K, and it took much longer than expected. But it doesn't take much anymore. But what I can see is that sentiment is extremely optimistic, extremely greedy, and we are way below the all-time high. And so that tells me that I think we have to be careful with Bitcoin at the moment. I'm not sure if the bear market is actually over. And I see too many people that believe that they can basically copy the history and say, okay, because it happened like this the last 10 years, it will certainly happen again the next 10 years.
Right.
That's not enough for me. I see there will be massive demand if these ETFs coming to the market. Yes, but then again, I don't see much more behind it anymore. I just see still simply speculation for higher prices in fiat, which doesn't really make sense to me. So, and coming back to your questions, I mean, in a extreme scenario, of course, if there is no electricity, it will be rather challenging to access your Bitcoin. If you have no free internet, I mean, in like free, uncensored internet, it will be also difficult to move, access and move your Bitcoins. You can, of course, assume that there will always be a place on this planet where you can or will have electricity and uncensored internet. But it might mean that you have to travel somewhere else and leave your place just to access your Bitcoin, maybe. And the other thing, of course, is it's becoming more and more difficult. All the on ramps, all the exchanges are not only getting regulated but basically shut down, and it's a nightmare nowadays to open up a new account somewhere. Takes you a lot of paperwork, KYC, AML, etc. And so there's a lot of money in the crypto world that not necessarily needs to leave. It just stays there, goes from one stablecoin to another, and then plays the rallies, speculates like crazy, and then maybe if it's smart enough, then they calm down and wait for the next bull run. But usually they all constantly invest and trade and speculate like crazy. So this money will not leave the sector. It's there, it's inside, and it's basically a parallel universe already. And yeah, maybe it could be that's enough already. But I would not be willing to put more than, let's say, I think if you have 5 to 10% in crypto of your net worth, of your total net worth, it's already extremely speculative.
Right.
If you are somebody that understands the sector, if you are there for many years, okay, maybe you can do it, but I would say rather somewhere in the 1%, maybe maximum 5% should be the allocation, and then it should be Bitcoin, of course, and not anything else.
Are there other areas aside from so viewing, Bitcoin and gold as hedges against inflation to a certain degree? Are there other areas that you would recommend investing in, particularly parts of the world that you would recommend investing in, since we know that maybe the future for the West isn't as bright? Again, I'm not saying that in 10 years, stock markets are going to be lower in the West. I don't know. And I'm not asking you to guess that either. I guess what I'm asking more is, do you see other areas as having more potential? And if you do, where would those be?
Yeah, I think that the Middle East has a lot of potential. It's probably the one of the few areas that have a really good outlook. Maybe India, I think, still has a lot of potential as well. Probably India and Brazil, when it comes to emerging markets, are very promising. And generally, as a region, I would focus on the Middle East, yes.
Okay.
And of course, you have small countries here and there which probably have also favorable outlook. For example, Guyana, a small little country, they found even more oil, have a lot of gold. Unless the Venezuelan do some stupid things there, this country has a bright future, lots of investments coming in. But it's hard to play these kind of countries, So, but yeah, I would assume the Middle East, unless there's more troubles in Israel, of course. That's basically the downside there. Then that would change everything. So Middle East, especially the United Emirates and Saudi Arabia, I think has a lot to catch up, and they have so much money to spend, and they are very aggressively investing and building the future over there. And they're very much optimistically looking forward, while in the West it's more like feeling like a established downtrend.
Right. Yeah. Well, are there other things that owning gold, maybe owning some Bitcoin, potentially putting some of your money in the Middle East, as far as ETF? Again, we're not giving out individualized financial advice, just general recommendations. Are there other ways that you believe investors could prepare for what you see happening? If we think that the future, there's going to be some, big fluctuations, there may be some unrest. Are there other things that investors could do to protect themselves for the future, in your opinion?
Yeah, I mean, one big argument against gold is always that it doesn't pay any interest rate, right? So if you just have 25% at the maximum in physical precious metals, you still have 75% in something else. And of
Right.
course, that's where you want to have, for example, a large and healthy allocation in blue chip dividend stocks. So those stocks that pay out 5 to 10% per year in dividends. That's the way where you can basically have a really nice income that you can live off without basically consuming the principal. So that's actually a very, very important part of my personal strategy and also of the one that we work with our clients. And that's where you can also play these macro trends when, for example, when you believe that inflation will stay high, continuous struggle between East and West, a new multipolar world most likely will mean commodity prices going higher because China, Russia, and a few other countries together basically control 75% of the commodity supply on this planet. And the West still needs those commodities, and that might mean that it's not possible to get them anymore, or at just maximum much higher prices, because those countries decide to ask for higher prices or only accept higher prices. So that would mean, yeah, I mean, of course, energy, oil and gas, you have some really nice names there that pay very attractive dividend yields. And it doesn't have to be the classical American ones. There is also, for example, in South America, a few good plays in the energy sector that pay really nice dividends, like a Petrobras in Brazil or Ecopetrol from Colombia, for example. That's one thing that you can do. Then commodity, of course, Rio Tinto, BHP Billiton, the largest commodity producers on the planet, basically. Those companies, they pay, I think, a very healthy 8, 9, or 10% dividend yield per annum. That's something I really like. That's something I think that makes a lot of sense. You need to have a cash flow, especially in a rather recessive kind of like environment. It will be very helpful if you have an extra income. And it doesn't matter if you have to pay some taxes on top of it, as long as you have money incoming. That also will always keep you positive, because it feels much better if there's money coming in than
Right.
out. And since mind creates matter, and what you think about and focus on will be the thing that you attract into your life. If you're happy and have something to be grateful for because there's money coming into your account through these nice dividend payments, it will put you in a totally different spirit with money than if you basically just constantly are angry about the increasing prices everywhere.
Right. Well, Florian, a lot of our viewers, I mean, thank you again for sharing a lot of your, opinions on this, your expertise. And I know a lot of our viewers are going to potentially want to follow your work. What would be the best way if someone wanted to reach you or follow your work? What would be the best way for them to get in touch with you or contact you or look at the information that you release?
Right. Well, to have a look, first of all, it's always good to go to our website, Midas Touch consulting.com. You will find our latest research on gold, on silver, on Bitcoin, macro, on mining stocks. You will also find most of the latest interviews that I'm doing. And then you can follow me on Twitter, obviously, and you can go to our free Telegram channel, Midas Touch Consulting. That's kind of like a mastermind group, people from all over the world exchanging ideas about where to put the money, with a special focus, of course, precious metals, and to a certain extent also crypto. And there's people from all over the world, and it's a great way to exchange ideas and keep each other up to date. So I actually, it's for me, it's the best news feed, my Telegram channel. So
Great.
that's the place to be. Yeah.
Okay, great. I will put links to all of those below this video. so that if anyone wants to reach you, they'll be able to do that directly.
Yes.
Florian, thank you again for spending your time with us, for sharing your expertise. We really appreciate it. We'd love to have you back in the future. It was a pleasure talking to you.
Thank you, Patrick. Pleasure was mine. All the best.
And yeah, thank you. And to all of our viewers, thanks for watching. Please remember to like and subscribe.